High yields on stable coins, yeah, that's where my bag at. All I really need is Wi-Fi, get money on DeFi, mega cash on MetaMask. You better run when the runners run, show you how to get your money up. Dollar inflated like bubble gum, markets are jumping like double dutch. Buying up gold till I get a ton, crypto, yeah, I got some. You better run when the runners run, you better run when the runners.
Good evening, ladies and gentlemen. It's Tuesday, March 25th, 2025. We have an awesome show for you tonight, revolutionizing the blockchain. As always, I got my good brother here, Ricardo Hamilton, aka Mims, making it make sense. What a time to be alive, brother. How's it going?
Yo, fired up and excited as always, man. We got a great show for y'all tonight. You know, I always say you don't know what you don't know, and you won't know unless somebody tells you. And that's why we're going live tonight, to let you guys know what's taking place in the blockchain revolution, the tokenizing of assets, and how you can put yourself in position to capitalize. So yeah, definitely strap in, get ready to take some notes, share this out. It's going to be a phenomenal show tonight.
Yeah, this is history taking place in 5 days. And these guys have been so busy this week. So we're thankful that they are coming on tonight. So if you guys are watching this, like it, share it out, drop some comments, because normally we go live at 10:15, but we're going live at 7 tonight to make sure we get these guys on. So without any further ado, two of the coolest guys I've met, super smart, well connected, and really want to see as many people win and get educated in this space. So our good brother from Arizona, Travis Flaherty, and from the West Coast, Billy Beach. Welcome, guys. Thanks for coming on tonight.
Hey, thank you for having us. It's good to be here.
What's good, guys? Thanks for having us on.
Hey, I just want to say thank you guys for all the hard work you've been putting in. I know, when I speak to Travis and I see Billy, you guys have really been working hard for the community, trying to help as many people as possible. And, there's just so many people out there that have such a negative mindset on where the world is right now. And somehow people even have a negative mindset about cryptocurrency and blockchain because the prices are down a little bit right now. But to me, this is the best time to be alive. This is the most exciting and innovating chance I think we have to change humanity. So I just wanted to get, everyone's hot take here is what gets you the most excited about cryptocurrency, blockchain, digital assets? Travis, we'll have you go ahead and start.
I think that I've been saying this a lot, but there's never been a time such as this. We've spent the last 4 years kind of in a fog. We had an administration that really drove innovation outside of the United States. We didn't have clarity. We didn't have framework. And so now we have a new administration that's coming in, and I did some research on this yesterday. And I was trying to figure out, because I've seen crypto, like we're all seeing crypto in the news. Like every time that I get into my news feeds, it's an article about crypto. And so I thought, I wonder how many times crypto has been mentioned since Trump came into office, or since the beginning of the year. 12,000 times crypto has been in the media, since January 1st. Wow. 12,000 times cryptocurrency has been in the headlines since January 1st. So think about that. So for me, I think what I'm most excited about is that we're getting validation now at the highest levels. We're getting credibility that's coming from the top down. And that's got to get people thinking, okay, maybe it's time that I need to start learning. And that's why I love what you guys do. You guys are so brilliant when it comes to educating. You provide so much value. And let's face it, there's still 5% of the population crypto wallet, 17% inside of the United States. It means 9 out of 10 people that you come across are still kind of sitting on the outskirts going, maybe it's time I need to start learning more about this. And here we are, right at the forefront, providing value and helping people come into this. So that's what I'm most excited about.
Yeah. No, that's a great point. And so it'll be great to see this clarity coming out from the Trump administration. And I keep telling people, because a lot of people sadly are dropping off because the prices are going down. But to me, this is the biggest shakeout right now, because I can see the big institutions just keep buying. Now, Billy, I know you got to go to DC a few times, meet with some senators, talk about blockchain regulation. So at this point, what gets you the most excited about this space right now?
I think it taps back into what Travis said, is the support, right? Having clear guidelines, having clear regulation for mass adoption. Look, if for those of you guys that are crypto enthusiasts like we are, go back, look at coin market cap, and rewind the total market cap of crypto back to September of 2022 is 1.3 trillion, 1.2 trillion, right? Hop on today, and obviously the market's down. We all know why. Look, when governments come in, they aren't going to pay retail, man. They're going to short it, right? Look, everyone dancing in the streets a while ago. ETFs. Y'all didn't know what you were asking for. You're asking for this is what you're asking for, to get manipulated. But bottom line, it's going to lead to a lot of mass adoption, right? So right now the squeeze is worth it. But where I was going is look at coin market cap today. We're just under 4 trillion now. Here's something that everybody needs to think about. If you look at the worldwide market cap of fiat investments in the typical market, 140 trillion. 3.8, 3.5 trillion, right? And all of crypto. That's the whole thing. That's all every token, the whole world of crypto, 140 trillion in fiat. And I can tell you guys, look, people are getting sick of Wall Street. People are getting sick of the manipulation, naked shorted. Companies are going public and getting massacred. And for that, they're paying $5 to $10 million, right? So you paid $5 to $10 million in fees, costs, legal, etc., to go public, and then you just get destroyed on the market unless you're one of the boys, right?
Right.
We've all seen the GameStop show, right? I mean, what happened when they lost their butt? Called Citadel, or said, yeah, here, another 60 billion. They don't care. It's just numbers on a keyboard, right? So for me, crypto has always been the opportunity for the little guy. I mean, someone in Mike, Ricardo, we saw this and some of the other projects we've been in where someone on the other side of the world can take advantage of the same opportunity and the same fractionalized, commodity or real estate project, et cetera, that we can here in the US. I grew up a broke little kid in Southern Florida, man. I was the kid that had a Lamborghini poster above my bed, and I used to look up at that thing, and that might as well have been Batman or Superman. You know what I mean? It was just so far detached from reality that movie stars drove those things, right? Like Don Johnson. And now you see, man, 16, 17, 18-year-old kids driving Lambos and doing things, and it's just the division of wealth. And I'm gonna tap into a little bit of taboo subject here, but for many, many years when I was in finance, a lot of the work that I did in that aspect was in Atlanta, Georgia, right? And Tim Mims, to speak, a little bit on the minority side, and what was always, the accessibility and the ability to build generational wealth, right, is now coming into those communities. And it's coming into those communities because of things like cryptocurrency, which is evening the playing field for the entire world and giving any level of population the opportunity to access that. That's why I love crypto. Look, don't get me wrong. I like making money. I like seeing charts go up, and those things are fun. But I like being able to see just the little people win, man, and people actually being able to build wealth that normally wouldn't be able to. That's it. It's a passion thing for me. I love it.
No, we always say, gold and silver is God's money, and cryptocurrency blockchain is the people's money. And I think that's really the only way people have now to build that generational wealth, given that the system is stacked against them. Yep. Mims, you do this all day, every day. But what gets you excited about this space right now?
I mean, I got to just piggyback, off of Billy. He kind of took the words right out of my mouth. It comes down to access. It comes down to opportunity. It comes down to those who, didn't have the opportunity, disadvantaged. And because of blockchain, because of digital assets, no matter where you are in the world, we talk about the unbanked and, people that didn't have that privilege. Now, anybody, as long as you got internet, you can, take advantage of the wealth transfer that's getting ready to take place. And we're big on the tokenization of assets, which is, over a quadrillion-dollar market. And now, because of blockchain, decentralization, fractionalization, the democratization of the whole process is something that is just revolutionary. This is very exciting, during this evolutionary time of humanity, and when it comes to money and global business and transactions. So it's just exciting to really see, dreams, people's dreams going to be able to come true. Things that they couldn't even have imagined, or that they did imagine come true, let alone even greater. because of the time that we're in right now. This is the time to really, create and attract and manifest the type of lifestyle and the type of generational wealth that you want to leave behind. This is the opportunity that we have now. So it's just a very exciting time to be alive during one of the most significant time periods ever in history. And blockchain is in the middle of that. It's a pin to that. Yeah.
Well, just breaking news right now, guys, that I didn't even know it happened from looking at today. President Trump's World Liberty Financial launches a dollar peg stablecoin called USD1. So you have the President of the United States World Liberty Financial launching a dollar peg stablecoin. You have GameStop putting Bitcoin on their balance sheet. That just happened today. Trump Media is partnering with Crypto.com to launch ETFs. BlackRock just bought $100 million of Bitcoin from Coinbase Prime, and they haven't sold anything in the past week. And I could go on for another 15 minutes. But what gets me excited right now is transparency. Okay. Yesterday, I watched Dumb Money with my boys because I wanted them to understand how the financial system works. So Dumb Money is a story of GameStop. And so we get to the end, and, they're all into it because they love to go to GameStop. And I've kind of talked to them about that before. And they get to the end, and, that last scene is like the SEC did an investigation and for 30 days and then dropped the case. And they're like, well, what does that mean? I'm like, that means they decided not to do anything. They're like, so you mean all those guys that did all those evil things and screwed over all the little people, they just get away with it? I'm like, yeah, that's sadly how the financial system that we have today is set up, with Wall Street, dark pools, naked shorting, and then we'll get into private equity later. So to me, it's the transparency, which ties into everything you guys said, right? Is bringing the power back to the people and holding certain people accountable and allowing wealth to actually go to those who deserve it. So I believe, knowing both of you guys, I think this is why you guys started Trusted Smart Chain and wanted to do something different in this space. So maybe just kind of give people a little origin backstory of how Trusted Smart Chain got started, what your goals and missions are, and how you guys are truly, like, when I'm saying this is revolutionary, I'm not being hyperbolic. Okay. I study this space. Ricardo and I look at this space all the time. There has been, nor is there doing anyone else out there doing anything like we are doing with Trusted Smart Chain.
Well, Billy is the, one of the key pioneers behind why Trusted Smart Chain even came to fruition, because this wasn't the original starting point, but out of necessity, Trusted Smart Chain came about. So Billy, tell them a little bit about just, where it all started and how we arrived here.
Sure. Yeah. And so had this ecosystem, and there's multiple pieces to the entire ecosystem. Again, we're the framework now. We're the framework. But originally, this ecosystem was going to be 90% investors outside of the U.S., outside U.S. accounts, just due to the regulatory environment that it's been over the last couple of years. And obviously, we've evolved out of that now. But originally, the team, these are the executive team were very high level investment bankers. These guys have taken hundreds of companies public. And, they know, again, looking right back to that market cap that I gave you guys earlier, there's 140 trillion in the fiat markets, right? So there's plenty of accredited money to go around that's sick of, Mike, to your point, being manipulated and et cetera, and wanted transparency through blockchain. So when the T7X team and the asset managers were originally looking at launching this ecosystem, they didn't intend to do a layer 1 blockchain. They actually intended to peg everything to Ethereum. And I was brought into this project about a year and a half ago, and in kind of earning my place after a while, I spoke up and said, listen, if you guys are doing real world assets that are truly fractionalized, okay, and a lot of you on here have seen real world assets, but so let me clarify that. Let's say there's a $10 million development. Then when they fractionalize that development, for better argument's sake, there'd be 10 million tokens, each token representing a dollar value. That is everything that T7X is doing is a true, real fractionalized share of an asset, right? Not we have this $10 million building, so we're doing 50 billion token, and they have every year. They're fractionalizing the asset. Okay. Each individual token is an actual share with a right to a dividend if that asset pays dividends, which right now we only focus on assets that pay dividends. So let's assume that, you bought $100,000 or invested a credit investor, not a credit investor, the opening Reg A, so we can have both. Investor put $100,000 into that asset, and the asset was paying a 10% dividend. And what that means, guys, is basically that $100,000, your return, the investor expected return off that would be about 10 grand a year. And those pay quarterly distributions. So, Mike, if you put 100 grand into one of our assets and you got your $2,500 every quarter, what would happen if that was pegged to Ethereum, Mike? That $2,500 would disappear pretty quick by the time you got it into your bank, right?
Yeah, I'd be paying some hefty fees.
So that was, and I jokingly kind of say that was. I won over many arguments that our ecosystem needed our own blockchain, and through some relationships that we have. So we at the same time we were consulting for another very large platform that is doing their blockchain. It just Genesis recently, and those guys are doing great. Our team was consulting for their team on some stable coin and some utility coin things, and basically went to their developers and said, look, we've realized now we have this issue because, again, we're trying to give true transparency, right? And we're trying to give true fractionalization, and we couldn't do that with Ethereum and the gas fees. And, that was the beginning part of the argument. Now we've created a lot of other SDKs within this blockchain that fit specifically tokenizing real world assets and give to that true disbursement. And, we'll talk about, we got to keep some special sauce to ourselves, but we could talk, I've got one of them we'll talk about tonight. But in any event, we ended up building out this framework of blockchain that is designed specifically to fit within this ecosystem in order to facilitate the fractionalization of assets from not only the crypto. Look, guys, I'm tattooed. I'm the crypto bro, right? I had the bright green car, but not only to fit the world of us crypto bros, right? But also from deep understanding of investment banking and fractionalizing assets as you would an IPO of the executive board, right? So we've taken both sides. We've really whiteboarded, hours and hours and hours of thought and process put into this to build a blockchain that really properly supports fractionalizing assets in a very transparent and a properly evaluated and regulatory fashion. So that's kind of where all this came from. Is it was never intended. It's a lot of projects start that way and they go, hey, let's do a blockchain, right? And then we'll make a bunch of money and then we'll go do something, and then when this something that we're going to do gives us some money back, we'll buy some of that token and then hopefully these node owners make a little bit of money and, but just give us money, guys. Come on. It's going to be cool. I promise. Right. We built the structure first and then the blockchain was an afterthought. And I think, through a lot of the contests, the promotions and things that we've been able to do, I think we've put our foot out in the community to show that, to say, look, we didn't drop this blockchain to go raise a ton of capital to go do something. This blockchain was really out of necessity, and now we just want mass adoption. So that's really kind of where it started and where it's taken us. I know Travis has some thoughts on this too.
Well, and when we went to California, and this is what I kind of wanted to hear your thoughts and opinions on this, Travis, and we talked to Matt and his team, and they explained to us the problems with going public on Wall Street and how much experience they had in doing that. That's when it all clicked to me, because I was kind of thinking the same way, Billy was espousing of that they weren't doing that. That's what I was thinking though. So Travis, you can shed some light on that, just because people probably think they've seen something like this, but they've never seen anything like this with the trust and transparency that these experienced, businessmen have.
Well, you look for a few things when you're looking at projects, right? You want to see if what problems do they solve? What utility is there? But even with that, who is the team? Who's behind it? And as you guys know, one of the first red flags of any project is you go to their website and there's no faces. there's nobody behind the project at all. You don't even know who's running it. And for me, what's interesting is Billy and I started talking about T7X, what, Billy, early 2024, maybe around spring. That was
Probably
somewhere around when it was first brought to my attention. And I loved what they were doing from a transparency standpoint, but I couldn't see how I could fit into the equation. And I didn't think that it would appeal to the masses because it was just aimed really at accredited investors. And so it kind of turned me off. And so, Billy, I wanted to say that you getting involved or really pushing for the smart chain is ultimately what got my attention, because now we could see how individuals like Ricardo and myself and Mike and everybody else that's watching could participate as well. And that's what really excited me. And so because of that, I decided to go out and sit down and meet with the team. And then as I started to look at, Matt's background and his track record for taking companies public, ringing the bell on the stock exchange, and Pablo, the CEO of T7X, and his banking background is just incredible. If you guys haven't been over to our T7X.io website, our partner's website, and just look at the advisory board, the attorneys, the advisors that we currently have, everybody from Andrew Scott, who, you could just go Google Andrew Scott and look at his background, or Barry Seaman. But you look at the people that are involved, and I believe that the best predictor of future performance is past performance. Track record really does matter. And this is what these guys have done. They have collectively taken hundreds of companies public. And it's not just about going public, Mike. It's about the structuring. When you get into a room and you listen to Matt and start to see how his brain works, especially when a real world asset is saying, okay, how can we tokenize? And he takes all of that information in, and the structuring alone is, I almost want to use the word proprietary, because you could go build a blockchain today and say, hey, we're going to force everybody to do a Reg A and Reg D. But it's not just that. It's the overall framework and the structuring that has to go into filing that Reg A and Reg D. And that is not something that can easily be duplicated. And so when we talk about our secret sauce, yes, we have a global framework that nobody else has in the blockchain space. Somebody might try to copy it, but then it's that special sauce of how do you structure these things properly to get through the Reg A and Reg D process and do it in a legal and compliant manner so that you're fully coherent and cohesive and compliant with the SEC. And that's where this team comes into play. And I think that that's what is going to be very difficult to duplicate.
Yeah, and so just to give people a little example of how massive this is going to be, and then Mims, you can kind of speak on this. Right now, okay, so you guys, if you're watching this right now, you are one of the super early adopters when it comes to real world assets. Okay, this is the first inning. There's 2 outs in the first inning. All right, that's where we're at. There is only $19 billion on chain. So $19 billion of value has been taken from the real world, and a digital representation of it has been put on a blockchain. Now, keep in mind, though, that's up 19% in just the last month. Well, crypto prices have just been kind of, bobbing up and down. But now, where could this go? Okay. There are decades of growth ahead for tokenizing assets. And this isn't just me saying it. It's not Ricardo or Travis. It's Standard Chartered, BCG, Citibank, McKinsey and Company. Okay. They're seeing 16 trillion by 2030, guys. That's in 5 years. I want you guys to do the math at home. In 5 years, BCG predicts we're going from 19 billion to 16 trillion. And the expansive markets are even more. 139 trillion in global commodities, 120 trillion in global bond markets, 109 in global equity market. And that's just the beginning. There's over 1.6 quadrillion total that could be brought on chain. So I don't care what the price is right now, Mims, as we always teach. The opportunity is here. So make it make sense, brother.
Yeah, no, that was fire. It don't get more obvious than that. And, this is the thing, this is called the largest wealth transfer in history for a reason. When we say we're living in the most significant time period ever in history, this time period will be talked about, studied, debated, for centuries to come. And, your loved ones are either going to look back and be, fired up and excited and proud, of what you did during this time, or they won't even remember your name. That's just where we are right now. And I mean, this is huge. Like you said, do the math. You're talking about in 5 years, 16 trillion. We're at 20 billion or so right now. I mean, we're talking about a lot of money that's getting ready to flood into the digitization and tokenization of assets. And we're here at the beginning, like you just talked about. So it pays to be early. It pays to benefit. It benefits to be early. And so this is what's so exciting. And we talk about this. Don't look at the price. I don't buy the price of something. I buy the value. I buy the technology. I buy the use case. The price is irrelevant. Eventually the price will correlate to the value. The price will correlate to the utility. The price will reach what we know it's going to get to, but don't let the price fool you. Study the tech, like Matt Travis talking about, the team, the development, the use case. That's what you want to see, and that's what you want to put your money in.
No, 100%. And, we kind of talked about the problems with Wall Street. Okay. We're going to bring you guys some serious alpha mad knowledge here tonight. And Ricardo and I are probably going to do a live just on this alone. But everyone needs to be aware of what private equity is and what it is doing to our entire economy, and how now they're now taking out businesses we all know and love. Michaels, Joanne Fabrics, just to name a few, Sears, JCPenney's, and now they're going for the pensions. So we're going to watch this short clip from Timcast IRL with Tiffany, and she has kind of gone viral for bringing this to people's attention. And this, again, is one of the reasons that Billy and Travis and Matt started Trusted Smart Chain, because there's a better way to do this, to give the power and control can stick with the businesses when they raise capital, and people like us can invest and not get screwed by Wall Street like they did to GameStop.
Business. We saw this, with Big Lots. So you're So what are you saying, Tiffany? You're saying that this is the next 2008 happening right now.
That's what I think. Yeah.
Can we short it and make $100 million?
I mean, if you shorted like the CL, so one of the things that was scary about 2008 is they repackaged the bad debt and sold it off as derivatives and as CDOs, and then they did synthetic CDOs. They're repackaging all of this debt as something called CLOs. And they're selling it to all the pension funds.
What?
All the pensions have been buying up this debt. That's what's freaking me out the most, because the pensions have been buying into private equity in exponentially increasing numbers over the last 10 years, because pensions are severely underfunded. Lots of them. I've been talking to Ian about Girl Scouts pension getting bankrupted by private equity and Girl Scouts of America.
Yeah, well, didn't they go woke?
They did.
So we don't care about that one.
Yeah, they definitely did. But okay, well, don't.
I was kidding, by the way. I'm sad to say.
But the Michigan Employees Union, a bunch of the unions that handle automotive unions, pensions, they're all investing in private equity. And the reason they're doing it is because if you invest in anything with a pension, every time the dividends come every quarter, you have to update what's on your books. But if you invest in private equity, you put the estimated returns for 10 years on your books. So nobody knows how bad it is for 10 years, and you get to hand that off to the next pension manager. Whoa. And it's their problem.
Okay, so hold on. You got this massively viral video.
Yeah.
It's Party City, Joann's, Forever 21, Big Lots. They're all collapsing.
Yeah.
Are there other companies that are collapsing too?
Hundreds.
Are there ones that have not collapsed yet but will collapse soon?
Yeah.
Do you know?
I mean, in my opinion, right now, private equity is bankrupting. They're going to short-term gain and then destroy Southwest Airlines.
Is Michael's?
I estimate they'll be bankrupt in the next year and a half.
Wow.
Because
what was the name of those companies? I'm gonna buy some shorts.
Southwest Airlines.
Southwest Airlines.
No, for real?
So everybody's wondering what happened with Southwest Airlines. Southwest Airlines, they've been trying to say all week, free bags is not in our DNA. Do you know what trademark they own? 2 bags fly free.
Yeah.
They own that trademark, and they have defended it and canceled other people's bags fly free trademarks through litigation because it is their DNA.
One of my friends was making remarks. I saw that he tweeted about complaints about Southwest about the baggage stuff.
Well, 1.8 billion in shares got bought up by an activist firm called Elliott Management's private equity firm. And their business is they come in, they buy enough shares to get board seats. And then they come in and they force changes that are bad for the long term for the company, but get short-term gains. Wow. Then they dump their stock and leave the company bereft.
Wow.
Yeah.
Is Michael's going too? Because I love
Michael's will be next.
I love the craft shops. They're good. Jeez.
Is it publicly traded?
It's publicly traded right now, but it was taken back public by a private equity firm that's taken them private and then public twice. And so they're going to get screwed. Like in the game of Monopoly of craft stores, Hobby Lobby will win. If there is a God, they will win.
Let's just like super simplify it. Basically what happens is these businesses are cash positive.
Yep.
But they have to pay massive interest rates. Is that it?
It's worse than that. Like if I had, I'm going to borrow this.
Little Tim Pool, are those coasters?
Tim Pool LLC coasters. Okay, this is your business. Okay.
All right.
If I buy a house or I buy a car, and I take out the loan, my name is on that loan, and I owe that loan back. If I'm private equity, and I buy a car, that car owns that loan back.
Wait,
okay?
what?
If I'm private equity and I buy Tim Pool LLC, I don't own that loan. My name's not on that loan. I have no liability if I bankrupt that loan. This Tim Pool LLC owes that money back. I don't have to do anything. I just get free money and I stick it on top of here. So Tim Pool was successful. They were making money and I said, I bet I could get more money out of that. But I'm never going to pay for it. Tim Pool's going to pay for himself. So I borrow money and I make the Tim Pool LLC owe the money back, not me. And then as soon as I get there,
You keep the money that was borrowed.
no, they don't borrow them. I mean, they give that money to whoever they bought it from. And now Tim Pool Company owns the money back when they were free and clear before that. Now what I'm going to do,
I'm still not following. Why take the loan out?
because Tim Pool is owned by Tim Pool, and I want to own Tim Pool LLC.
So someone wants to buy the company.
The private equity firm wants to buy it.
So a private equity firm wants to buy it. They get a loan, but the debt liability is on the company, not the purchaser.
Not the purchaser, and they have no liability.
So basically, the purchaser then owns the company, makes a bunch of profit, lets the loan default.
Worse.
So
not only do they buy the company, but they're going to force the company to sign a contract with them to be the manager, the advisor, and possibly have some kind of other financial role. So now the company owes me money every month as their advisor. Could be $1 million, could be $100 million. So I'm going to start funneling the wealth out of that company to me. Second, I'm going to sell all the land that all their stores are bought on. I'm going to sell all of it out from under them. And I'm going to lease it back to them. And I'm going to dividend all that money to myself. So now I'm literally strip mining every bit of wealth. Now I'm going to take all the assets they have. All the assets they have in their warehouses. I'm going to sell that to a liquidator. So now they have to buy every month and they don't have any cushion. Okay, so I'm going to sell that to a liquidator and I'm going to dividend that back to myself. At the same time, I'm going to make a bunch of cuts so their customer service is going to drop, their sales are going to go down. And whatever's left, I'm going to dividend that to myself. And at the same time, they're still owing all this money. Now they're leasing back the land they owned before. So they have another bill they didn't anticipate. I am expeditiously increasing the rate of which they're going to hit bankruptcy.
So wait. They're breaking it apart and selling it off piece by piece, collecting as much as they can, and then leaving a shipwreck.
Leaving a shipwreck that the American taxpayers pay for. And that we pay all of the, like, if you look at Joann's or Party City or any of these are 250,000 people in the last 3 months that are going to be unemployed.
Jeez.
We now have, you're talking about 100,000 anchor stores and parking lots that are going to be empty.
Yeah.
I feel like I conspiracy minded, but
so, I mean, Mims shared this with me last week, guys, and I was just livid. I was upset. I was emotional. I was like, and again, if you guys didn't catch that, you might be like, who cares? I don't shop at Michael's or Joann Fabrics. The pension funds own those stocks, which are the baby boomers and our parents or people that we know or people just in the stock market, and they're going to have to get bailed out. So we're all going to end up paying for this. And it's because private equity is basically screwing over all these businesses, and just like Wall Street is. So, and Billy and Travis feel free to answer this, but T7X and other, well, there isn't anyone else doing it to the magnitude we are. But to me, this is the solution of what you guys are doing. Am I wrong?
You guys ever watch, what is it? So it's Avengers, where like they want to come in and they want to just take over a planet and they want to like suck all of the resources from the planet. Right. And then they go on to the next planet. It's like, that's almost like what you just heard when you hear this. And you're right. I think that what we do is we provide a solution that gives these businesses access to liquidity without having to give up control, without having to be manipulated or forced to I mean, it's actually really sad to see what's happening with Southwest. It's so interesting that this just brought up, because I've followed Southwest and I've read Herb's book, and I've actually admired him and the culture that he created, because you guys know I love anything that has to do with driving culture and community. And so I've actually studied that company, and to watch what's happened post Herb era and now to see where it's happening. And I flew Southwest just the other day, and when I was checking in, and I used to remember they were just the happiest, friendliest people. And it was from the top down. You could tell that they really enjoyed working there. And I actually said to Summer, it's gone. It's missing. Like, I can feel the vibe shift, even at the gate agents to the people that are working, the stewardesses. It's shifted, and it's so interesting to hear what's behind it, because I didn't realize this is what was going on. But you definitely, and it's more than just the baggage, right? Yes, that's something that they were known for. But to get back to your point, that is exactly what we are doing, is giving people an alternative that allows them to maintain control without having somebody sucking the life out of them.
And that's an important piece for everybody on this call to understand as well. When we fractionalize an asset, we fractionalize an asset given a token which earns you a right to your dividend, but we actually tokenize the cash flow, right? So we back it by an asset in the case of default. But where you have a public company that issues shares, any group, perfect example, right? The video before, any group can come in and buy enough shares, right? And now you could take over ownership, you can make board decisions, you could fire the CEOs, etc. The way we're fractionalizing companies is typically we'll take an asset, we'll do an SPV off of it, which is called a special purpose vehicle, off of that asset. Let's say about real estate, we will title the real estate, right? But we title the real estate in case of default against a loan. What we're actually doing is we're tokenizing the amount of financing that we're giving to the entity in order for a return back to our token holders. And those token holders have no, it's a non-owner share. It's a right to a dividend. It's not a right to a business. Right. You guys and the people on this call, and no one else is going to know this until Saturday, but we have a true actual business, a healthcare company, which is groundbreaking. The founder and the owner, the CEO, is a doctor. She has her doctorate from Stanford. She has her lab at Stanford. She is a professor at Stanford. She is incredibly smart, and she will be here this weekend. And we are working on basically building that structure to tokenize her company to help her raise capital to get up and going with her healthcare company right now. And that was one of the major reasons why she chose to do this. She said, look, I'm terrified to go public, guys. Yeah. Because when I issue stock, I don't have control anymore. Someone could come in, buy me out, and then throw me out of my own company. We've all seen the shows. I don't know how many of you guys have watched Suits, but or Billions. I mean, these are great shows to watch and really understand finance. But it was so funny. We ended up at a friend of mine's house. It just happens to be my buddy that got me to Mar-a-Lago and got me to meet Bernie Marino and to have breakfast with him the other morning. I was at his house for a meeting, and she was just sitting there, and we got to kind of talking back and forth. And I told her what we did, and she goes, I've been wanting to find someone that can do this. She almost jumped off the couch and ran at me. I'm not kidding. You guys are going to see her level of excitement this weekend. But smart business owners that want to maintain control, look, they're happy to pay the dividend, guys. They're happy to give those distributions, right? They're happy to bring on that debt, assuming their company can handle bringing on a debt to expand. But we're providing an incredibly safe space for them to do that, whether it's in healthcare or real estate or commodities or oil and gas. Our White Claw project, I was sick and in bed that whole weekend, so forgive me. Were one of you guys there in Oklahoma?
Oh yeah.
Okay, I don't even remember getting there, guys. I barely remember the dinner the night before. Just for everybody listening, I was like dying in my room that whole weekend. But James, James's business right now operates literally out of his pocket. It's 35 to 60 million in receivables every month between the wells and the buyers of oil. Exxon, Dan's Brothers, et cetera, big companies. For him to expand, he's got to leverage he's got to be able to bring more cash in for him to grow. He can grow up to 150 million, and we're going to help him do that. Like I said, he's operating 30 to 40 million right now. We're going to help him expand up to 150 million on our platform, and he has nothing to worry about from being overtaken, a stock buyout, et cetera. Yeah. All he's got to do is take on the debt, pay that or do those distributions to those investors that own those tokens, and then as an added benefit for anybody out there that understands stock share and position, well, if your company value, let's just do an easy example. And Mike, you're doing a $10 million development, okay? And in that development, you have renters that pay rent, right? So you get that rent, and that's what you distribute out, a portion or fraction of it, right, out to those those investors that come in and invest in your company, right? Well, think about this. If you did 10 million shares, each share was $1, okay? And these are free trading shares, just like stock, just like Tesla, just like everything else, right? Now, think about this, Mike. If you owe a debt to all of those shares, and you see that share, maybe Travis for some reason bought $50,000 worth of your token. Travis needed to liquidate, right? And the market was a little soft. So Travis had to sell at 85 cents. Mike, what are you going to do as the business owner?
I'm buying that up as soon as I can. I just made 15%.
Absolutely. Your cap rate compression just went down, right? Which means your value went up, but you're buying your own debt back. So now you don't owe anything to Travis anymore. You bought back those shares. So if you were to bring in $10 million, tokenize an asset, and as you're starting to get cash flow, you're paying to those investors, but you're also buying your own. Look, investors can buy their own tokens back. Guys, it's an open market, right? So Mike goes in and starts buying token back. 5-7 years down the road, Mike just got a $10 million loan that he paid a fraction of the interest on because he bought the tokens back at a value. This is revolutionary business. It's changing the game. And we're the first. Look, we're not the first ones to think of this, but we are the first ones to build an entire framework to do it properly, transparently, and within regulatory guidelines. And I can tell you, unless you've taken a couple hundred companies public like our team has, good luck.
Mims, quick summary for the people that might have not grasped that. That was a lot, but
yeah. I mean, look, there's a problem and then there's a solution, and what we're talking about right now is really trying to help people grasp the magnitude of the problem. And a lot of people, even though you don't understand the problem, maybe you can feel the problem. You know what I mean? You know that there's something not right, and you know that there's a better way to get it done. Now, the opportunity that you have is that we're providing the better way to get it done, and you can actually capitalize in the process. It's one thing to, they say knowledge is power, but really it's applied knowledge is power. So we can provide you with the knowledge. We can let you know, the problem, and we can also provide you the solution and how things could be better because of blockchain and decentralization and tokenization and fractionalization and things of this nature. And all sounds great, but it's not going to be any good to you unless you apply this knowledge, unless you take advantage. So this is why we're bringing to you the Trusted Smart Chain T7X platform and helping you guys kind of grasp the magnitude of the opportunity that's before you right now, because the opportunity, it gets greater later, but it's also the timing, that opportunity cost. You want to make sure you're in position now, right, as opposed to later. So, this is the opportunity of a lifetime when you really understand, just where the industry and the market is going, and you find the blockchains, the companies, the people that actually provide that solution to capitalize on these, these trillions of dollars that are going to be transferred, and being tokenized on the blockchain.
Well, like I said, Travis and Billy are super busy, so we only got 5 more minutes. But Travis, can you kind of bring us home here? Give us the big picture of how this works. Obviously, you guys definitely want to watch a full presentation that Travis does. You can reach out to any of us or anyone that shares this with you in the future. Reach out to them, get a full presentation. But Travis, maybe just bring us home, big picture. What are we seeing here?
What you're looking at is really utility. At the end of the day, when you look at a project, it comes down to, again, who's behind the project. We've just talked about the team and their experience. We talk about What problems does it solve? We know the problems that are out there from private equity side as well as just from the tokenization side. Now let's talk a little bit about utility. Why is Bitcoin at $87,000 today? You know, when Bitcoin 5 years ago, guys, was below $5,000 a coin. You guys realize that? 2020. Does it sound like it was that long ago?
No.
It doesn't sound like it was that long ago. You just realize, I mean, depending on what day you look at, Bitcoin's up, whatever, 1,400, 1,500% just over the last 5 years. But you know what? It wasn't easy. People, you know, to realize those gains, people had to go through COVID crashes, multiple bear markets, right? SEC lawsuits, FTX collapsing, all these things. But here it is at 87,000. Why? Because there's utility. It's a utility token. People see value. Listen to this. People aren't just buying Bitcoin to make money anymore. People are buying Bitcoin because it's money. If you get what I just said, you'll understand, right? There is a demand in utility. So where does our utility come from? That's the genius. So if you take a look at the top, our partner T7X, they are a strategic partner digital asset platform that works with real world assets. What do? They provide this tremendous service through their experience to be able to guide these real world assets, give them a safe passage, if you will, ultimately to be able to tokenize, to be able to access that liquidity. Now, what supports all of that? It has to be on a blockchain, a layer 1 blockchain. Now, I was doing some research on this. I said, how many blockchains are out there in existence? And it said, about 500. I said, okay, how many layer 1 blockchains that are out there that are actually in existence? And then that number dramatically dropped, anywhere from 40 to 50 layer 1 blockchains that are not in some development hell or still trying to create their white papers. So now we've cut that number down. And by the way, we joined that exclusive community on Saturday. So you have a blockchain. What makes up a blockchain? All of those nodes, all of those node operators. So here's the beautiful thing. Those real world assets, they come onto the T7X digital platform. From there, they have to operate on a blockchain. That is the trusted smart chain. What makes up that smart chain? All of our node operators. And guess what those node operators earn for the services that they are providing? TSC token. And the beautiful thing is those TSC tokens go right into your Prosper wallet. So what's creating the utility? Every time a real world asset comes onto the T7X digital platform, guess which token that it's paired to?
TSC, baby.
It is paired to TSC. What does that do? It increases demand. Billy, what's our favorite quote?
The greatest benefactor to limited supply is to demand.
That's right. So what we've done is we've created utility within our ecosystem. Guys, we talk to real world assets almost daily now. We get a call from somebody who says they're looking to tokenize. And when you get down to it and you ask them, what's the utility? They can't give you an answer. What they end up saying is, we're just trying to launch this token so we can go raise a bunch of money so we can go figure out how to go launch this business. So there is no utility. It's all based on hype. And what we've been able to create is a phenomenal framework that lends to trust and transparency, providing services that, you know, at a time such as this, where the tokenization space is exploding with an administration that's now acknowledging cryptocurrency at the highest level. And here we are, the first blockchain in the world that is providing a universal framework for the tokenization of real world assets. And right at the heart of it all is trusted smart chain and the TSC token.
Fire. That's a mic drop right there. Billy, is there anything you wanted to add? Ricardo and I will finish it off, but I want to give you guys a little break before your Zoom.
I'm going to pop off. I'm going to go get that started. Billy can wrap it up for us. Thank you, guys.
Thanks, Travis. Awesome. Appreciate you, brother.
Thanks, Travis. Yeah, so large ecosystem. There's a lot of pieces going on, a lot of problems that are being solved from multiple different directions, guys, whether it be blockchain, whether it be traditional finance and fiat issues. I know T7X is there. We're waiting for, so the breakfast I was at last week with Senator Bernie Moreno. Don't know if you guys know who that is. If you don't, you should. Bernie wrote Fit 21, which is the bill effectively to create the guidelines here in the US for blockchain currency. So some of the key points from that breakfast the other morning was that stablecoin regulation should be in place this month, which leads back to why Trump's team is launching their stablecoin, because now there's a structure, right? Also leading to, I'm gonna credit Matt's brilliance. So about a year ago, Matt came back from Europe and said, MiCA is so far ahead of the US And for those, curious, MICA is the regulatory framework in Europe. He came back and said, dude, USDT is getting delisted. You got to stop using it. And I was like, no way. USDT is massive. Okay. At the breakfast the other morning, we said, hey, if the regulations is going into place right now, Bernie, do you see Tether lasting? He said, nope, not in the US, not until they figure their stuff out and can pass an audit.
Right.
So, what we're starting to see is these just this blurry gray area and this gray or this picture really come into focus, and they're doing it very quickly. So what I'm super excited about and what I'd like to leave everybody on this call with is that they are aiming to have full legislation written by June and have it into law by August. Wow. That's massive.
Yeah.
And to have a real framework and to have, a real pathway forward for companies and businesses and asset managers, to move forward and be able to offer these assets out to the world, really, through this democratization, fractalization is massive. And we're poised right in front of this big wave. And,
oh yeah,
we're building, we have an incredible dev team. We're under NDA, guys, with them. It is what it is. They're doing another very, very massive project, but I can assure you guys, these are some of the biggest and best guys out there. And we're going to build one hell of a blockchain, and we're going to support a lot of projects. T7X is, they're one of our partners, and they're one of the utility pieces, but we're not stopping there. I told you guys I would give you a little clue into some things we're doing. So we've built in an SDK that's called a gas tank. And what the reason that we built this in is when an asset manager, so again, right, we as the blockchain are not promoting investments, okay?
Right.
We are a structure in order for those asset managers to fractionalize their investment and put it on our blockchain. Those asset managers still have to go out and raise their capital. They still have to do the marketing. They still have to bring in the investors in the door. Now, we have a little special sauce with that too, as you guys know. But point being is those asset managers are still responsible for bringing investors in the door into their asset, right? They still have to do the webinars and teach what their asset's about. Okay. Well, Mike, think about this. If you were an asset manager, and let's go back to Mike and Ricardo's $10 million real estate development. Okay. If you were trying to raise $10 million and you were trying to do that on blockchain, right? What if you were able to tell that all your investors that were coming in, hey, when we after we raise this capital and we close out and your token becomes free listing, right, to where you guys can actually trade in and out of that token, I'm going to let you off ramp your position not only anytime you want, because they're not locked in for 3, 5, 7, 10 years like a typical real estate project, but I'm going to allow you to do it gas free. The asset managers, we have built in an SDK into our blockchain called the gas tank. During that capital raise, when the Reg A and the Reg D are open, that asset manager can take some of that incoming capital from their portions, right, from their overhead and their management fee, and put it and pre-fund a gas fee for a certain amount of time to entice investors to come into their asset on the platform without paying gas fees. And they could set that timeline. They could do 30, 60, 90 days. They can make it refillable to where when it starts running low, they just put more in. Right, from their management fees. This isn't the capital raise going into the project. This is the management fee from their side. Really cool stuff like that, guys, that just really enforces and promotes mass adoption into this real world asset framework. It's going to be cool. We have a few more things like that too, but that's the one I'm gonna let out of the bag for now.
Okay. All right. Good little sneak peek there. Yeah. Give them a little more incentive to get involved in the time frame that they want. The other thing I love that you talk about, Billy, is when and so what Billy's talking about there, guys, is accredited investors, where you need over $1 million liquid capital. And that's essentially how they gate kept a lot of other good ways to make money in America. So typically they need to invest in 5 or 7 years. So when they put their money in, they can't really get it out for 5 or 7 years. With what we're doing, those accredited investors can get out basically anytime they want. So it's great for the business side, and it's also great for the investors, because here's what you guys have to understand is all these RWAs we're talking about, like the oil and the Tulum resorts, a normal person just can't invest in those. Okay. You have to be an accredited investor, or there's certain things you might be able to get in with Trusted Smart Chain. But typically normal people cannot even put their money into these investments. And now with what we're doing here, if you're in the right position, you might be able to even just put a couple $100 in. Okay. So we have access to, opportunities average people could never even dream of. And so again, we're just completely changing this space and revolutionizing finance, man. It's exciting, Billy. But I want to give you time to get ready for your Zoom. So thank you for coming on tonight, brother. And we'll talk to you soon.
Yeah, give me 1 sec. Let me answer Frank's got a question here. So Frank, what if a company's already on a publicly traded stock market but looking for more capital? How can this product help a company with that? Absolutely. So a fractionalized company is typically fractionalized across the business, right? The company itself, but typically companies have assets, they have real estate, they have things that are outside of the typical scope of their IPO or when they're going public. We can again take an SPV against either like a real estate asset, or let's say they manufacture widgets, right? So there's equipment to those widgets. Well, if that equipment has value and that equipment was a cash purchase, is on another lien on it, or even if there is a lien on it, but it's small in relation to an equity position, we could take a SPV, create an SPV, which is a special purpose vehicle, lien on that equipment, and maybe we only want to go to like 60%. We'll get a third party valuation to verify the value of that equipment in the event that they defaulted and we did have to liquidate that. But we can absolutely pull things out of public companies, SPV them, do an audit, do a Reg A, do a Reg D, raise capital, close it out, and tokenize. So yeah, the world's kind of our oyster. And again, leading back to what Travis said earlier, look, guys, you could hire a law firm to do a Reg A, and you could pay them their 50, 60, 100 grand, whatever it's going to cost you to do that. But to understand how to properly rip apart a company that way that's been built and gone IPO, you need years and years of investment banking understanding to do that, and our team has that. The second piece is even once you've done that, even if you've identified an asset, how to fractionalize that particular portion of the asset and ensure that the investors are protected and that the asset can take on the debt to pay a distribution. That's a whole nother level of special sauce. And then the third piece is eggerizing everything and effectively filing the S1, the audits. Are you doing a PCOB audit or a GAAP audit? Is it Reg A or a Reg A plus? It's not that simple, guys. It's not that simple to do this. This is many, many years of investment banking and many, many years of taking companies public to understand this. I don't understand it. I'm around these guys all the time and I'm learning every day. But this is 100 plus cumulative years going into fractionalizing these assets that other companies aren't just going to be able to hop in. Other blockchain projects can't just hop in and do this, guys, which is why you see this. We're backed by the gold, or we're backed by the oil, because they don't know how to fractionalize and properly really take a company public on chain the way we're doing it. And other people are going to follow us, and that's okay, right? But we just want to be the first one out the door and the first one doing it the right way. So
no, absolutely massive, man. Truly revolutionary.
Yeah,
and man, I'm excited. I can't wait for the March 29th. Can't get here soon enough.
Get some nodes, guys. Get some nodes.
That's
builds. You're building the whole framework of this entire ecosystem by being a node operator. We need you as much as you need us. So, guys, as always, thank you so much. And I just want to take a second, man, and like watching you guys over the last handful of years. I mean, I think we've been around each other for about 4 or so years now.
Yeah.
Kudos to everything you guys are doing, man. It's an incredible way to put yourselves out and take care of the space and educate the space, and it means a lot. I like spreading things and I like involving people and stuff, and what you guys are doing is awesome. And for all of you guys watching, I'm a big Andy Frisella. Is anyone else an Andy Frisella fan? Do you guys listen to Andy Frisella at all? Do you know who I'm talking about?
I don't.
Yeah.
Sorry.
No. All right. Well, he does a podcast. They do no ads, right? It's just out of the goodness of his heart. He's a billionaire. Okay. He's the owner of First Form. Okay. His podcasts are awesome. They have a funny saying on there. Don't be a hoe, share the show. So all the listeners, guys, give these guys some love, share the show. They do it out of the kindness of their heart and the goodness of their heart. And we appreciate you guys, man. Thanks for having me on.
Thank you,
awesome.
Brother.
Thank you, Billy. Talk soon, brother.
Yeah.
Thanks, guys.
Man.
So Mims, what a show. And I just want to say, first of all, mad knowledge tonight, guys. And if you didn't pick that up, okay, the investment, that's exactly the show I wanted to give you guys, is to give you the experience we got when we went to California, when we talked to Matt, when we learned why they were doing this because Wall Street is broke and private equity is destroying our country. When they talked about how they're filing Reg A and Reg D, our paperwork with the SEC. Okay. So this isn't just like we're backed by this, because a lot of you probably think you've seen something like this in the past. You haven't. And I hope if you actually listen tonight, you can see that this is completely different than anything out there and anything that we've ever done. Just because the word node is on something doesn't mean it's like that
1
thing,
minute.
right? So Mims, your thoughts for tonight?
Yeah, I mean, folks, I told you had something special for you. You know, this is the time, folks. You know, it's the education, it's the information, and then it's the actually taking advantage of the opportunity. So, you know, like Billy said, reach out to one of us and take advantage. You know, acquire the software, get the node. You know, March 29th is the token generation event. We're going to start receiving those rewards, those digital assets that are going to be benefiting from the tokenization of the real world assets and tokenized securities on the platform. Okay. So if you want to learn more, you want to get it, you know, take advantage, be in position. Okay. Reach out to one of us, you know, like this out, share this out. You know, this is the time. The nodes, they're rising in price. You want to get them now, you know, while they're relatively cheap. And you know, before the coins start distributing the rewards. So, you know, I'm very excited, brother. You know, very excited, and you know, look forward to a bright future.
Yeah, and we didn't really hit this point enough, so let me just make sure it's clear so nobody gets upset at us later. Okay, March 29th is our genesis. That means the nodes will go live. They will start producing tokens. That day is when the most tokens will be paid out each day. Okay, as more people join the network, as more nodes come online, less tokens will be distributed to each node. It'll be the same amount of tokens each day for the first 4 years, I believe. Okay. But as there's more nodes, each node gets less of a piece of the pie. The cheapest the nodes will be this week as well. So the nodes will go up in price and the nodes will accumulate less token starting March 29th. So you have about 4 days to get positioned. I'm sure some of you will wait. You'll want to see, oh, is it going to actually work? Oh, now they're producing tokens. Some of you will come then. Then some of you will say, well, when's the liquidity coming? How much is a token worth? Because you don't see the value. Like Ricardo said, you're looking at the price. You're not looking at the value, right? So we'll open up at a price and the price will go up and you'll start wanting to come in. But whenever it is, guys, we're here. We're just going to keep winning and bringing real world assets to the blockchain. Mims has got to get to a Zoom as well. Thank you for everyone that jumped on.